Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY fell in volatile trading last week, snapping a 4-day winning streak after the Supreme Court overturned President Trump's tariff measures imposed under the National Emergency Act. In a 6-3 ruling, the court found that the use of the 1977 law exceeded presidential authority. The seller followed a week where the dollar had generally been firm on mixed economic data, with inflation higher than expected, but growth significantly weaker. Technically, the dollar is consolidating between the 50-day moving average at 97.95 and the 20-day at 97.15, holding within a broader rebound channel from 95.54 low. The index has reclaimed the 97 psychological levels, supporting the current recovery towards 97.75. Key resistance sits at 98 and 98.07, while support remains at 97.15 and 97. A break below support could trigger a short-term correction, though fundamentals suggest pullbacks may be limited. Next up, let's have a look at oil. Oil prices rallied more than 5% last week, with WTI hovering near 6-month highs despite a brief pullback towards 95.3. The primary driver remains escalating geopolitical tensions between the US and Iran. President Trump warned of a 10 to 15-day deadline if Iran does not limit its nuclear program, increasing war risk premiums. Traders have also boosted Brent call option purchases and Iranian military activity, including exercises around the Strait of Hormuz, has intensified concerns. In the short term, WTI is showing signs of consolidation near the $65.5 to $66 region. RSI remains elevated in the 60 to 65 range, suggesting pullback risk. And the daily close slipped below 65.24 and the $65 psychological level, pointing to possible position liquidation. Support lies near the 14-day and 20-day moving averages in the $64 region. If geopolitical risks escalate sharply, upside levels above $68 and even $70 could come into focus. Next up, let's have a look at gold. Gold climbed more than 2% on Monday, trading above 52.10 and reaching multi-week highs as trade protectionism and geopolitical tensions boosted safe haven demand. The rally accelerated after President Trump imposed a 15% global tariff under Section 122, triggering retaliatory signals from the EU and delays in negotiations with India. At the same time, stored US-Iran nuclear talks and rising military activity in the Middle East added to the uncertainty. Technically, RSI is holding above 60, supporting a short-term bullish bias, while the MACD histogram shows easing bearish pressure. A sustained move above 5182 and 5200 level would open the way towards 5300 and potentially 5450. On the downside, $5,000 remains a key psychological support, followed by levels near the last week's low and the 38-day moving average. Lastly, let's have a look at the Australian dollar, which extended gains early in the week, briefly trading above 71 cents amid continued tariff uncertainty and a weaker US dollar. The Australian dollar is also supported by rising expectations that the RBA will maintain a tightening bias as inflation approaches 3% and domestic data remains firm. Technically, after rebounding from 70.15 last week, the pair has regained upward momentum and is consolidating around the 71 cent level. RSI is rising near 59, and a push above 65 could open the path path towards 71.12 and the yearly high of 71.47, with 72 cents beyond that being the next target. On the downside, support is seen at 7015 and the psychological level of 70 cents, followed by the 30-day moving average near 69.48. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.